Hello, and welcome back to Explain the Charts. It's July 21st, 2025, and today we're turning our attention to tech giant Alphabet, specifically its Class A shares, ticker Google. The buzz around Google is palpable, with major catalysts on the horizon. Its Q2 earnings report is expected next week. Recent news indicates strong analyst confidence, with Bank of America raising its price target and KeyBank upgrading their target on Alphabet from $195 to an impressive $215, while maintaining an overweight rating. These upgrades are largely driven by expectations of a solid Q2 and a potential earnings beat, which is a crucial piece of fundamental information for any trader. Before we dive into the charts, it's important to note the current market price from our latest data is $185.06, though some real-time feeds show it slightly higher, around $188.78. This discrepancy might be due to post-market activity or different stock classes, but we'll focus on the raw data available up to July 18, 2025. Now, let's switch to the daily chart to get a broader perspective on GOOGL's historical performance and recent trends. Looking at the one-day chart, stretching back to March 2024, we can observe significant volatility, but also clear patterns. Notice the impressive run in late 2024, particularly in December, when Google surged from around $170 to nearly $195. Hitting a high of $195.40 on December 11, 2024. This aligns with the earlier $195 price target mentioned by KeyBank, suggesting that part of the analyst confidence was already priced in. However, following this peak, early 2025 saw a sharp correction, with the stock plummeting from a 52-week high of $207.05 on February 4, 2025. Down to the $150 to $154 region by late March and early May. This $150 to $154 range formed a critical support zone, showcasing a clear triple bottom pattern in March, April, and May of 2025. Each time the price touched this level, it bounced back strongly, indicating significant buying interest and a solid foundational support for the stock. Now, zooming into the more recent price action, specifically from late June 2025, we see a renewed bullish momentum. Google has climbed steadily from the $173.54 level on June 26 to its current data point of $185.06 as of July 18, 2025. This recent uptrend is particularly encouraging, as it has decisively broken above previous resistance levels around the $178 to $180 mark. The volume accompanying this upward move in late June, especially the candle on June 27 with over 108 million shares traded, suggests strong institutional accumulation and conviction behind the rally. Let's narrow our focus to the hourly chart to examine the short-term dynamics of this recent upward push. On the 1-hour chart, starting from late June and into July 2025, the uptrend is even more apparent. We can clearly see a series of higher highs and higher lows, characteristic of a healthy upward channel. The price has successfully defended multiple short-term support levels, notably around $175 in early July, and then consistently holding above $178 towards mid-July. The increased volume during significant upward candles, like those seen on July 9th and July 11th, reinforces the strength of this rally. This short-term bullishness, combined with the positive analyst sentiment and upcoming earnings, paints an optimistic picture heading into next week. However, we must also consider the immediate resistance the stock faces as it approaches the $185 to $186 mark. Let's now switch to the 15-minute chart to analyze the most granular price movements from Friday, July 18, 2025, for immediate trading insights. Here on the 15-minute chart for July 18, 2025, we see the intraday action that led to the $185.06 close. The day started strong, consolidating above $184, then saw a dip, but recovered strongly in the afternoon session. The price found support around $184 in multiple instances throughout the day, showcasing intraday resilience. The steady grind higher towards the market close on strong volume indicates buying pressure persisted. This chart highlights that the immediate support for short-term trades is now around $184 to $184.50, with resistance building around the day's high of $186.42. A breakout above this level would signal continued strength. Now, let's tie this all together with our bullish and bearish cases and what to look for when trading Google. For the bullish case, the primary driver is undoubtedly the anticipated strong Q2 earnings report next week, bolstered by recent analyst upgrades to $215. Technically, the stock is in a clear short-term uptrend, having broken significant resistance levels, and the previous major support around $150 to $154 has held firm over several months. Increased buying volume during recent rallies also supports a positive outlook. Long-term investors might see any pullbacks to previous resistance turn support levels, like $178 or $180, as attractive entry points, especially if earnings confirm the positive sentiment. On the bearish side, we must acknowledge GOOGL's history of sharp pullbacks, as seen in early 2025 from its all-time high of $207. If the upcoming Q2 earnings fail to meet or exceed the high expectations, or if management provides cautious guidance, we could see a swift reversal. Key support levels to watch for any bearish price action would be $178, then $170, and, critically, the $165 area, which has served as a pivotal zone in the past. A break below $150 would indicate a more significant downtrend and invalidate the recent bullish structure. When deciding when and what price to trade, always consider the news context. The upcoming earnings report is a binary event. Trading into it can be risky. For swing traders, waiting for confirmation post-earnings, either a clear breakout or a bounce from support after a dip, could minimize risk. For long-term investors, building positions on strong support levels during dips, especially if the fundamental story remains intact, is often a sound strategy. Always use proper risk management, including setting stop losses below key support levels to protect capital. To recap, here are the crucial price levels to monitor for Google. On the upside, the immediate resistance is around $186 to $188, followed by the $195 level, which was a significant peak in December 2024 and an earlier analyst target. Beyond that, the 52-week high of $207.05 stands as a major psychological and technical hurdle, with KeyBank's new $215 target being the next major milestone. On the downside, initial support is at $180, then $178, which served as resistance previously and is now expected to act as support. Below that, the $170 level provides a buffer, and the critical long-term support rests firmly at the $150 to $154 range. Our unbiased prediction is that a breakout above $186 to $188 is highly likely, perhaps 70 to 80% chance, if Google delivers a strong earnings beat next week and provides optimistic forward guidance. This would reinforce the current bullish momentum and could swiftly push the stock towards $195 and beyond. A more moderate scenario, perhaps a 30 to 40% chance, would see the stock consolidate or slightly pull back to the $178 to $180 region if earnings are merely in line with expectations or the broader market faces headwinds. A significant drop below $170 with a 10 to 20% likelihood would occur only if there's an unexpected earnings miss or a substantial negative shift in the company's outlook or market sentiment. Looking ahead, the most important event is the Q2 earnings report itself. Watch for the actual numbers, the forward guidance, and how the market reacts immediately post-announcement. Also, keep an eye on the overall tech sector and broader market performance, as these can significantly influence GOOGL's trajectory. Thank you for joining Explain the Charts for this in-depth analysis of Google. Don't forget to like this video, subscribe to our channel, and hit the notification bell for more market insights. Happy trading, and we'll see you in the next video.